Confidence in a soft landing is growing, but you point out that vulnerabilities remain. So where does the global economy stand right now?
We're in a good spot. Inflation is coming down globally. Economies are slowing, which is good to bring inflation down. But the slowdown is not dramatic. We do see recessions in some parts of the world, but globally, really a recession is not in sight at the moment. So as a result of this relatively good scenario, markets have been booming. There has been a rally in risky assets, and borrowers of the lower credit spectrum, such as countries with relatively high debt, have been able to access markets. Many of those were shut out of markets for a year or a year and a half, some for 2 years. And since the beginning of the year, market access has been restored very broadly.
The world's looking towards potential rate cuts in the second half of 2024. Are there risks associated with that?
Well, we would not want to see premature rate cuts. So our baseline advice continues to be to start cutting interest rates only once there is confidence that the inflation target has been reached or is very close to being reached. So among emerging markets, we have already seen a number of countries starting to cut. Brazil, for example, was the first country to start hiking when inflation started back in 2021, and it was also one of the first countries to start cutting. Among advanced economies, Switzerland is the first country that started cutting. There are rate cut expectations for many other advanced economies, but of course, the situation is very data dependent right now.
So looking forward through the year, we have geopolitical tensions, ongoing conflicts in Ukraine and the Middle East, a number of elections coming up. What are potential tripwires along the way that could, undo some of the positive impact and growth we've seen?
So one thing we're watching are commodity prices, of course. We have seen some ratcheting up of oil, for example. Some of the metals have also seen quite a bit of appreciation since the beginning of the year. But it hasn't dramatically impacted headline inflation to date. But of course, there's some risk that an intensification of conflicts could further put upward pressures on those commodity prices, and that could have consequences for inflation and ultimately monetary policy at some point. We are also watching very closely different components of inflation. For example, services inflation remains higher than manufacturing inflation in a number of countries. And so this sectoral composition is another risk factor.